It's been quite a week on the premier current affairs show on radio, Deep Dive on Capital 100.4 FM with Rumbi Zaivenge.
But the one thing that we cannot stop doing is conceptualizing, is thinking, is growing, and even sitting down and doing nothing is something. Somebody said that to me once.
The Deep Dive with Rumbi Zaivenge, Monday to Thursday, 6 to 9 p.m. The premier current affairs show on radio.
Many thanks to you for staying tuned as we get into the second hour on the Deep Dive. Sounds there of Khaled with Softest Touch. It is 27 minutes past 7 o'clock and it is a good evening. We are also streaming live on our Facebook page at Capi Talk FM. So I know that you're concerned about the bottom line prices. I, for one, have noticed a significant price hike. And would really want to understand why this is happening. And this is one of the reasons we are having this important conversation. Joining me is Mr. Innocent Marimo, as he is acting CEO of a Confederation of Zimbabwe Retailers. I am also joined by Dr. Mtokozi Sinkosi, chairperson of a Consumer Protection Commission, as well as Persistence Gwanyanya, an economist and member of the Reserve Bank Monetary Policy Committee. Mr. Marimo, good evening and welcome to the program.
Good evening, ma'am. How are you?
Very well, thanks. Thanks for joining us. We are also joined by Dr. Nkosi. Dr. Nkosi, welcome.
Thank you. Good evening, Zimbabwe. I'm happy to be here to discuss consumer issues.
It's a very important issue indeed. Persistence, good evening and welcome.
Good evening. Thank you for having me on the program.
Oh, wonderful. So, I mean, just as a way of forming substantial and important stasis in this conversation, you will agree, or perhaps let's dissect that issue. Let me start with you, Dr. Nkosi. Has there been a hike in prices? And are consumer concerns, are they justified? How do you see it as a Consumer Protection Commission?
Yes, I think the recent past we've actually witnessed serious price hikes, and I think as a commission we are very disturbed. We are deeply concerned. We are not happy because I think we do not want to go back to the era where we were experiencing a free falling, I would say, currency. We seem to be seeing with this one. It's a bit weird because the price increases are actually both in the local and foreign currency terms, which is very, very disturbing because the effects, the consequences are really very much unfortunate. Because, for example, from a consumer perspective, the purchasing power is being eroded almost on a daily basis. Less and less is getting into our pockets to afford goods, and in particular, I would say the basic commodities. And I think the more this trend it's allowed to go on, it actually put a strain even on the government itself. Because what is going to happen now, maybe resources which have been budgeted for other areas, they are now going to be rechanneled towards this. At the end of it, there are actually serious consequences to the economy because there's less that is available for me to spend. There's no money that I can actually save to possibly maybe take to the banking sector so that the banking sector can also give this money or lend it to investors. And when that happens, the economy will start to shrink. Aggregate demand for products and services will actually suffer. And I think as a country, we are going to pay dearly. So from a consumer protection perspective, we're very uncomfortable. I think over the past, few days, weeks, we've been trying to have a situation where there's an all stakeholders meeting to try and interrogate these issues, because what seems to be happening is speculation. What is the major cause? What is the major driver? What has suddenly gone wrong, right? Because you also have a situation where in some quarters, the issue was we have got a shortage of foreign currency. This is the reason why the little that is there is actually trying to look at so many products. But the irony of it is this. Most of these service providers, the retailers, the manufacturers, they are all selling in foreign currency. So this issue of trying to say we are having a shortage, that's the reason why now prices are, we find it a bit uncomfortable. In fact, it would have been nice, for example, if we had these guys, the manufacturers themselves, being here, telling us directly what exactly is going on. We don't want to speculate, but the little that we understand is going on, we feel there's actually something behind our back. Yes, they've been some reasons have been advanced to try and justify this madness, but we are not happy. We really need solid answers to address this particular issue.
And with that, Innocent, let me come to you. What are some of the factors that have contributed to these recent price hikes from a retailer's perspective? What is causing, so much brunt, as the Consumer Protection Commission is saying there?
Thank you very much for that question. So the consumer concerns with regards to the price increases, they are valid. Yes, we have noticed, we have recorded price increases within the past few months, actually. Prices have been gradually increasing over time. But what we need to unpack today is the reasons behind these price increases. And for these collaborative meeting of sort that we are having here. So fundamentally, the reason behind the recent price increases pretty much lies in the exchange rate, the current prevailing exchange rate. The current exchange rate is not allowing retailers, wholesalers to recoup their investments. That is the major reason that is behind these price increases. So as retailers and wholesalers, we are leading in the economy with regards to the uptake of ZIG. We are leading in terms of the collection of ZIG from consumers. But the challenge that we are actually facing currently is because the supply chain, our supply chains are generally dollarized. So we are sitting on large stocks of ZIG without very much room in the market to dispose of the ZIG because the supply chains are dollarized. So this is the challenge that we are actually facing because on average, our income is about 70% within the local currency and 30% in USD.
And not the other way around?
No, not the other way around.
Oh, really? But there's so many things priced in US dollars.
And the other thing is when we now try to buy goods from our suppliers, in most cases, there is a ratio of 80% USD and 20% ZIG, while our income is predominantly in the local currency. So this is the challenge that we're actually trying to balance right now. And the current price increases is just a reaction from retailers and wholesalers who are now pricing for survival within a disrupted supply chain.
Persistence, I want to bring you into the conversation. You heard both the consumer perspective and the retailers and wholesalers perspective there. They talk of, scarcity, speculative pricing. What are the macroeconomic factors, in your view, that have contributed to Zimbabwe's price instability? And also we can take a look at, how some of the policies around, monetary regulation have impacted this surge in prices.
Thank you. Admittedly, we have been experiencing some re-emergence of volatilities, both price and the exchange rate volatilities. I've indicated to you before that I take the view these volatilities are being driven by dollarization, de-dollarization that is unraveling faster than expected. So what do I mean by that? You know, when we launched the ZIG currency in May, in April this year, the dollarization level was around 85%. But immediately after the launch, and owing to widespread acceptance of the currency, the vote of confidence in the currency, and probably goodwill in ZIG, the level of dollarization went down significantly, such that currently the authorities estimate the level of dollarization at 60%. Now, this is against the authorities' expectation that maybe by year end, dollarization would have reduced to 70%, and by 2025 to 60% and 50% by 2026. This is what I mean by dollarization unraveling faster than expectation. So what does de-dollarization? What does de-dollarization entail? Like I've indicated, it entails widespread acceptance of the ZIG and therefore widespread usage of ZIG. But clearly, this de-dollarization has to be supported. So it is sustainable. It has to be sustained by some measure of support, which ideally should come from the government, both the fiscal and the monetary authorities. But like I've indicated, I think what the authorities have expected, de-dollarization was beyond the level with de-dollarization, was beyond the expectation of the authorities. Hence the volatilities that we are seeing in the economy, but which volatilities are ideally going to be mitigated or absorbed through some intervention, some measure of intervention by the central bank, maybe through injection of foreign currency in the market, in line with the operation of the structured currency, which is the ZIG, and which I think is where we are going, including some fiscal measures that Treasury is going to implement. But
Persistence, I'm wanting to just hear from you on the aspects around supply chain disruption. This is something that, from the retailer's perspective, has been mentioned as a driver for price instability. Just unpack for us, what role do supply chain disruptions play in price hikes?
So the supply chain disruption, in my view, is disruption means when the guys in the end of the supply chain accept this ZIG, they expect to be able to utilize that ZIG for their purchases to support whatever they are selling. And those that accept, we expect acceptance as we go down the value chain. But if now at some node in the value chain, there are elements that now start to reject the current, it causes the disruption in the supply chain. So which disruption in the supply chain would then cause some further rejection in the ZiG and accelerate the volatilities of the ZiG current.
I want to come to. Oh, all right. Let me.
Ideally, the widespread acceptance of ZiG was supposed, which is the de-dollarization, was supposed to be underwritten somewhere, but ideally by the central bank through the convertibility of that ZiG. So ideally, the players who would have accumulated ZiG and wanting to access foreign currency for their import requirements should be able to access that foreign currency in their interbank market, and obviously as the central bank injects money in the interbank market.
On that point, persistence, I want to hear from Innocent on that one. I mean, is this achievable? This he talks about volatility. He talks about being able to then offload all of that ZiG to then get a dollar, dollars and de-dollarization. How can retailers balance profit margins and consumer affordability? And what does the future look like? In the current climate, are prices going to continue skyrocketing?
So for us retailers and wholesalers, the major determinant for our profitability is our relationship with our suppliers. We purchase goods from our suppliers in bulk at a negotiated price, at a lower price. And that is the determinant that allows us to minimize the cost on the end consumer. So I think just from that, you can see the impact the disruption of the supply chain has done with regards to the prices. It has been affected to the price increases. So, and I agree with Mr. Pesigwanyanya. I think there's need for collaborative effort to ensure the acceptability of the ZiG. I think us as retailers and wholesalers, we have done our part in accepting the ZiG, and we are currently in numerous consultative meetings with government to ensure that the ZiG is widely accepted. Because from our side, it's not only the supply side that requires
that 80-20 you're talking about.
Yes. So we actually have other operational costs that need USD, unfortunately. Currently, we need to power our entities due to power cuts, power supply challenges, and our salary, our wages, they are also in USD. So these are things that we have called for, and we are actually working with government to try to come together, suppliers, us retailers, wholesalers, and also consumers, so we can have a sit down to actually deliberate on a way forward on how we can achieve the sustainability of our local currency.
And I mean, it then brings us to the very important consumer position. You are mortified with what's happening. You are very uncomfortable as a protection body for the consumers. How can you ensure fair pricing is happening? How can you ensure there's monitoring of the pricing and the price structures? What sort of recourse have you put in place, and how are you going to engage with the retailers to ensure fair pricing?
It's very interesting. Obviously, the justification that they've actually been coming through. One from obviously the economists, the monetary authorities, where I think if I got persistence right, is that maybe the rate of de-dollarization is actually happening faster than what they expected, which in a way becomes a bit interesting. Yes, there are the monetary authorities, obviously data possibly is available to actually back, that statement. But through observation, I think go into any shop today without mentioning possibly large retail established, operations, right? The big ones. Anyone else, generally speaking, they are looking for USD, right? I think if I got Innocent correct here, you spoke of an 80-20, right? To say 80% are in USD, 20% in local, right?
That's what I also picked up.
Something like that. So, if that is correct, then the de-dollarization that we are talking about, for me, it doesn't really, it's not telling. It's not really giving me that confidence to say, yes, there's wide acceptance. Because I think almost on a daily basis, the commission itself, it's receiving calls. I'm at this particular shop, I want to buy this, and they're insisting on USD. Alternatively, I'm here, they're telling me our machines are out of order. Okay, I want to transfer, they're refusing to give me the ZIG account. I want to do a zip it. Now, these are daily, I would say, encounters that we're actually getting with our consumers, which then brings us to possibly what I was talking about earlier, to say, if most of these guys are selling their products and services in USD, to then talk of a shortage and even to try and place blame on the exchange rate volatility. True, like in that particular era, previous era, the Zim dollar, fine, that free falling was actually happening. But I think now it's not something that I easily accept. Fine, we're also doing our own surveys where prices have actually gone up in both currencies, the USD and your local. And which is really worrying, where we're actually saying we need the industrialists, the manufacturers to come. He says when you go there, they are looking for foreign currencies, right? Which naturally, yes, if they're asking for foreign currencies, you are also going to be selling in Forex, because we have not seen people actually queuing to the Reserve Bank to actually get. So if we have got the USD around, which you are asking consumers, why then do you want to blame this volatility? True, there are other costs which are retailers are actually, incurring. But interestingly, you also highlighted, okay, we are paying our guys in Forex, which is very good if you're actually doing that. Because majority, we always have this problem to say, our consumers, the generality of them, they're actually earning in local currency.
Let me hold you there. I'm very, very happy to welcome Dr. Mtashu into the conversation. Dr. Denford Mtashu, good evening and welcome along. I'll rush it because we've got very little time.
Okay.
You are following the conversation.
Yeah.
Speak to us. The retailers are being blamed for hiking up prices. What are you adhering to price controls? What are the challenges that you're facing?
In fact, we don't need to price control. The unintended consequences of a price control, just like what has happened right now, is exactly what we're seeing right now. We may say we don't have price controls, but there is a larger part of the business community that believes that even the exchange rate is the price control is being applied through the exchange rate, because if you apply any price beyond the official exchange rate, you receive a fine, you receive a ticket, huge amount in tickets. So, but let's look closely. If let's say you are in the meat and livestock value chain, if you are selling a cow, if you want to buy a cow right now, you can't buy it in the local currency. All the people that are selling their cows, they are not their cattle, they are not selling in the local currency. But the enforcement only starts at the abattoir or at the shop level. And then the FIU comes and say, you must then sell this whole beef in the local currency at the stipulated exchange rate. But this stipulated exchange rate is actually, there is a wider gap between that exchange rate and the unofficial exchange, the parallel market exchange rate, which the market then in its own perception believes that it is now reflective of price discovery, value preservation. If I price at the official exchange rate, I'm actually running deep into a loss. Let's also look at the issue of the GMB. I'm sure you saw the circular that GMB has indicated that they'll only be selling wheat or buying and selling wheat exclusively in USD. Wheat is a very huge component of the bread supply chain. So how on earth will you find a baker being able to actually manipulate or whatever that they do to dribble the system and be able to sell in the local currency? It is not possible. So what I believe is that the policymakers in Zimbabwe must be very realistic, must also come down from the high chairs and be able to look into the mirror, or rather to look at the policy, look at how it is impacting the people, how it is impacting business viability and sustainability. I'm sitting on a number of shops that have shut down. And then we come here and we want to believe that the exchange rate is okay. There is no shortage of foreign currency. And in any case, if I'm compelled to sell at the official exchange rate, and yet my sales right now, a lot of people are coming into the shops, they swipe off all the products, they take those products and sell into the informal economy, an informal economy that has continued to grow. And there's no enforcement whatsoever. And now, when I've got the ZIG, just like most of the supermarkets right now and suppliers and manufacturers are sitting on huge amounts or huge stocks of ZIG that they don't know what to do with. So that is not enough. I'm saying if you've got the ZIG and you are a retailer, the manufacturer or the supplier will come to you and say, pay my invoice, 80% I want USD. And then 20% I want ZIG. So where do you take this huge stock of ZIG that you have collected? So we've got a market failure, and we need to be able to admit that. And the exchange rate has got to be liberalized. We need to confront the animal, the elephant in the room, and admit that so far, in as much as we've tried to de-dollarize, but who are we de-dollarizing, for? Because we are simply de-dollarizing, and the aspect and perception of de-dollarization is looked at in the lenses of a 25% economy that is still formal. Is the informal sector is it de-dollarized? It has gone cash, and even the supply chains are also going cash and also going dollarized. So this is a policy glitch that we need to confront and admit that at least we have tried, but let's sit around the fire and look for solutions. And one of the solutions, if you ask me, for example, you cannot
give us one.
Yes, you cannot let the gap between the official and the unofficial exchange rate widens to beyond 80% like it is right now. The Reserve Bank must quickly come in, intervene, inject some US dollars, ensure that the big companies, the big manufacturers or the key manufacturers in the supply chain continue to receive foreign currency inadequacy. Because if it is not adequate, you may then see a lot of what is happening now, a behavior where a supplier would then have to make a decision when they've produced. Should I sell to the former retailer who is going to pay me in ZIG, or I in-source foreign currency by selling to the informal trader? The informal trader is got ready cash. So this is a fundamental issue, a fundamental area that we cannot ignore and sit here and want to believe that all is well. Because if shops are closing at the rate that they are, yes, we are happy that they are being taken over by some indigenous local Zimbabweans that are taking up the retail and also space. But in terms of fiscal revenue, supporting the fiscal revenue to Zimbra, there isn't much traction that has happened, that is corresponding to the number of new and emerging shops that are opening. So what does that tell you? It means that where you kill a giant, then you have killed the support this revenue support that they've been giving to the treasury. So I think that is one fundamental area that we need to look at.
Amazing. So many good points that you make there. Persistence, we've got 4 minutes left in this program. I think a very quick recommendation from you going forward. More needs to be done. Who are we de-dollarizing for, and what's the way forward?
Thank you. Let me start by addressing Dr. Ngo's concern about my remarks of de-dollarization. So I would want maybe to categorize the thought process, to sequence the thought process in phases. What started is widespread, that is phase one. It was widespread acceptance of ZIG upon launch. But because that widespread acceptance was not adequately underwritten, we sort of saw some reversal of that ZIG acceptance and sell-off ZIG. And that's phase two, which is probably the phase we are in right now. The phase three would be because we have failed clearly to keep pace with the de-dollarization levels. There's need now to recalibrate and adjust. Mr. Mtashu had indicated the need to inject foreign currency. So it's one of the recommendations to underwrite and restore stability at the moment, to inject foreign currency and to meet the foreign currency requirements of the importers.
All right. So let me hold you there and come to Dr. Nkosi in the studio. Going forward, then, for the consumers, what happens whilst we are waiting for this adjustment? What are you going to do for the consumers, and how are you going to interact with the retailers, with policymakers, to ensure that there's a smoother flow of this very essential transactional relationship?
In fact, there's an urgent need to have a roundtable discussion. We really want business to thrive. We cannot do without business. We need the quality of our lives to be enhanced at all times. Their existence in terms of constant supply of goods and services is top-notch. We expect that. But at the same time, we are also saying if there are issues that ought to be addressed, if there are issues that need urgent attention, yes, the government is there to come in with policy interventions where they feel that there's actually a problem. And we want to be honest with each other. Right? As a consumer, the more prices are actually going up, I'm going to starve. And I think that's the last that we would want from our constituents. But at the same time, we also want business to be fair to us. But if it means that issues that are on the table that are not being addressed and ought to be addressed, this round table should be able to look at that. This is why I was actually saying that, look, I think in future, if we can actually have these manufacturers, these industrialists here to say, we are the ones who produce. Our issues are these. And I think the government itself, maybe through Ministry of Industry and Commerce, they actually listen. I think there are constant engagement that are actually taking place. So we need to understand, where did we lose the ball? What needs to be done so that we move forward?
Dr. Mtashu, in closing, what needs to happen? Are retailers forced to pick between viability and as Dr. Puts, and affordability, as well as people not starving to death? Where's the middle ground there, and what needs to happen in the meantime?
I think we need to stop the ongoing blitz, the filing of closure of accounts. It just does not augur well. We need to fix the problem other than to actually concentrate on the symptoms. If we need to enforce, then it has got to be uniform. There's got to be uniformity. We have got to enforce everybody, starting from the informal sector that is currently refusing to accept US dollars. Then we need to start there and say everyone must accept the ZIG. You cannot selectively enforce within a particular sector of the wider retail and wholesale sector. And then number two, the production environment must be reflective of competitiveness. What are those key issues that are not making our products competitive? Prices continue to go up. The key issue is the exchange rate. And then the second issue, of course, is the availability or lack of it of foreign currency for the productive sector. And also the other issue is the issue of high informalization. we cannot continue as the situation is right now. Let's begin to strategically deal with high informalization. Remember, in dealing with high informalization, we're going to increase fiscal revenue. We're also going to increase, in terms of, there's not going to be any lawlessness like what we are actually seeing right now, and not shortchanging of any that is going to continue to obtain. And there's going to be leveling of the playing field. And policy must be able to promote and protect and enhance established businesses, while, of course, giving accommodation to emerging green shoots and emerging SMEs, emerging businesses.
I think that's a good place for us to end our conversation. Definitely quite a lot of issues still remaining unresolved. But what I did pick up there is that there is need for a round robin, a convening of all interested parties. And the suppliers who are not accepting the US dollars, I think, need to be put on the table. Persistence, you said there that there is need for some policy adjustments. We will certainly be taking the conversation up from all these angles. But allow me at this point, gentlemen, to thank you.
I can assure you that
yes,
the authorities are seized with the issue, and these adjustments are, in my view, and expected to happen as a matter of urgency.
Well, that's very reassuring to hear, and we will certainly, take you up on that and ensure that we talk about the next steps with the very concerned members of the public. So many thanks to my guest this evening, Persistence Gwanyanya, there on the phone, an economist as well as a monetary policy committee member. Thanks so much, Persistence. Good night.
Thank you. Good night.
Fantastic.
Thank you, everyone.
Thank you. And in the studio, two doctors, not just one. Dr. Mtokosi Sinkosi, chairperson of the Consumer Protection Commission, was here with us. Thank you so much, Dr. Nkosi.
Thank you.
And Dr. Denford Mtashu, president of the Confederation of Zimbabwe Retailers. Thank you so much, Doc.
Thank you.
And Mr. Innocent Marimo, ably standing in the void there, CEO of Confederation of Zimbabwe Retailers as well. To the listeners, thank you so much for your interaction. I know there were still quite a lot of messages, but we need to talk more about price instability and all that needs to happen. This was The Exchange on Capital 100.4 FM. We were also on Facebook Live. So do continue to talk to us on 0719 100 404. Now with that, it is 8 o'clock. It's time for the news.
It's been quite a week on the premier current affairs show on radio, Deep Dive on Capital 100.4 FM with Rumbi Zaivenge.
But the one thing that we cannot stop doing is conceptualizing, is thinking, is growing, and even sitting down and doing nothing is something. Somebody said that to me once.
The Deep Dive with Rumbi Zaivenge, Monday to Thursday, 6 to 9 p.m. The premier current affairs show on radio.